Good morning, everyone. It's Chrissy from Solstice ATR. Hope everybody's doing great on a Saturday morning. You can find me at Solstice ATR. You can find me on Twitter. That's my handle. You can find me on Discord, and you can DM me if you need more assistance. If you like this video, hit the subscribe button and thumbs up. So let's first start by taking a look at the overall market and the conditions we were in this week due to the market noise and overall market. So let's put a plan together. We're going to make sure that investors are not looking for the nearest exit or continue to go higher. You have to have a plan to be bullish and bearish in case things turn around in the market. I am not saying that the market is broken. Usually when the market gets a liquidation break and it reverses and continues higher, it makes the market more stronger. We want to have realistic expectation. What do people do as behavior when the market is red, bleeding, or when the market is green and everybody's running up that hill? Do we have stable credit? Is there anything in the global markets regarding international and domestic? And is there anything in the Black Sea that's going to cause a reaction? And some people are asking me always, hey, is this market ready to turn and go down? We're going to trade what's given to us on the chart. We don't look at history other than just the technical side of it to understand what the conditions were at that period of time, so we can see what the future can be in the prior years and what we can look at on the charts to continue either higher, go side market, or down market. And remember, I do not trade history. I trade what's given to me in front of me, and I try to look what the conditions are for the coming week or the coming month or the coming quarter or semi-annual, annual, or 18-month out on the long term, while the short term, we trade it according to the volatility. Has the market turned bearish? I don't believe until the conditions are met, because usually that liquidation break from Wednesday, we had an up day. Tuesday, we had a down day, that liquidation break, because due to the tweet, the tax increase, they may pass something in Congress, but I don't think it's going to be a 42% or 50% taxing the rich, okay? And, Bitcoin and crypto, they want to tax them at 80% of your capital gain. Are they out of their mind? So that's one thing. I don't want to go into it. Never hurt to have a bullish or bearish plan in case things turn the other way. So just remember, take a snapshot of this. I will cover most of the futures stocks, some stocks, one or two Forex. I'll cover some ETFs, Bitcoin and Ethereum, and small cap. Very important. In this week's action, small cap stayed, even on that liquidation break on Thursday, stayed very strong. So remember, we use this for illustration use. I am not a broker or a dealer. Past performance doesn't indicate future results. Use at your own risk. You cannot copy this unless you ask me for permission for the data. Okay, let's go on by looking at the conditions, and we'll come back to the last couple of slides in the chart. What I want to have here is the S&P Fortune 500 company. It's very simple. I have looked back as far as 1980, 1983, when the condition, the rate of change, or the resistance and support and the momentum indicator reached the bottom. Then we continued higher till 2000. Then in 2009, the same condition happened. Then in 2020, the only two conditions that happened very extreme was the 1983, the 2000, 2001, 2003, then the reversal of 2007, 2008, 2009, and the 2010 continuation up, and the pandemic other than the trade wars. We can see that I'm going to split this board in half. We're going to start from here. So we'll grab this area till about 2000, before that condition changed. We can see that the condition, the rate of change, when it spiked, we had that move, that correction right here, then we moved up. If I just take this area here till 1987, it looks much bigger. So we'll split it into one more board here so you guys can see the condition where the reversal was, then the recovery. We had a small push a little higher. That's what we call a little extra push. Then we reset a little bit to where we started from in the prior years in 81 and 1983. We reset, then we continued higher to 1987. Similar condition happened. Let's just zoom down one more time, or we'll go just straight to the right side from the 1987. We'll just stop right here. Similar condition happened after the reset, but here we didn't have the rate of change or the resistance and support being at an extreme. It just reset a little bit, then we continued higher. By year 1992, we never hit the peak of it, at 100% plus. So we continued till 2000. Then we came, okay, let's go here, till 2000, 2008. Where are we at right now? 96, 97, 98. Okay. Here we had peaked on a rate of change between 1999 and 2000, 2001. We peaked. Then we reset 100% of the move back down. Then we continued higher. Ever since the 2003, 2004, we continued higher till 2007, 2008. Then we had a similar situation, but the rate of change wasn't at a peak when we reset here, but we reached a peak. Then we came back until 2009. By 2010, 2011, we recuperated 100% of the move in 2013, and we continued higher. We can see that the change has happened. And in 2016, we didn't have the same thing when the European zone had. Then we had the trade wars. We had a couple of glitches here in 2014, 2015. Then we reset in 2016 in the Eurozone. Then the 2018, the trade wars were never hit the peak. Then we eventually hit the peak in the pandemic up here in 2018. Then we fell a little bit further down to the bottom of that, and we reversed straight back up. Does this mean we are exhausted? I am not saying we are exhausted. All I am saying that the condition can continue a little further before setting back down to retrace part of the move. Then we continue further out in the next couple of years. So what I'm going to go is to one of the slides I have at the end of the video and go over that in detail. So we know that that's the S&P 500. We'll start with the RTY. And what I'm going to do is compress it to a faster time frame from this area. So what we're going to do, we're going to go to the style. We're going to go to the time frame. We're going to go intraday. We're going to do 90 days outlook. Then we're going to do 4-hour chart. The reason why I'm using 4-hour instead of a daily candle is I want you to see the reaction in the market that has happened last week. I usually have a monthly fib. It's in from high to low, from March low to March high, and that's the purple Fibonacci. You can see the date on it, 3/5/21. That was the low, and 315 was the high in the Russell. Are we back inside the range of the monthly? Yes. Has the weekly fib from the high, from the Sunday high, from basically trading hours, from Sunday till Friday, we had a peak. We had an inverted head and shoulder. This was the reversal on Thursday due to the tweet in the market about the taxation and the Biden administration. Then on Friday, that liquidation break got brought back up and we continued higher. So this was basically the machines and algorithm and the weak hands got out of the market and we continued higher and we created a cup and handle. Does this mean we can continue higher? As long as I'm above this number, the 2230 area, I'm still going to be bullish on the overall market in the small cap. You can use the IWM in small cap, which is the ETF fund for the futures. You can see that cup and handle. That was the reversal. Let's see what happens. We are in that range. Let's go now to the NASDAQ 100, the NQ. You can use the QQQ in the NASDAQ 100. We know that the monthly fib is down here. We got to the extension of the 61. Then eventually last week we fell back in. Wednesday we got the rally back up. Thursday we gave up 100% of it. Then on Friday we rallied back up to the backside of the channel. We looked up and came back to the backside of the channel. We closed a little bit below the 61.8. You can see the high and low, the weekly fib. And what I'm going to do is zoom in and zoom back out so you can see where the monthly is coming from. So we do know that this is the monthly chart from high to the low. We have the extensions, the 23, the 38, and the 61. I do not have the 50 right here. So at least you have a better idea where we are in relationship to the NASDAQ 100. Let's take, or you can use the QQQ like I said. Let's take a look at the Dow Jones Industrial Average, which is the YM. We can see that the Dow Jones Industrial Average is in a similar situation. We looked up. We fell back in last week. Then we continued Wednesday back up. We fell on Thursday, and then on Friday, we recuperated inside that symmetrical triangle. We are range bound in the prior week's distribution to the upside. Do I believe that the market continue? The most important thing that we do have to hold the 33,750 or the 33,800, depends how you look at it, in order to get continuation to the upside, and we break to the annual high on the chart, which was the 23%. This is the monthly, and that's the 38% fib extension on the monthly chart for the Dow Jones Industrial Average, or you can use the DIA, which is the ETF fund for the Dow. Let's go look at the ES, which is the ES Mini S&P 500. You can see that the monthly is up there. We cleared the 61.8. I believe we have tested the 78.2% fib, but we fell back in a little bit. In this falling, I consider this like a shoulder. This is a little bit low because of the reaction on Thursday. The machine sold it and people panicked. You know, the weak hands has strengthened the market, and we rallied back up 100%, and we cleared the annual high of the week before on Friday. Does this mean we can continue higher? The most important thing that I would keep an eye on is on the 41, 48, 41, 32 to stay to the upside in the market. If we do end up losing the 39 area or the 32, I would watch my fingers. Things may change. But remember, sometimes the market can get always overbought and continue higher while other people thinking that the market's going to turn back down for them. So I will look at the monkey bars on this chart a little early today so we can see what has happened in the recent week or so. We're going to go to monkey bars. This is on a 30-minute, what is it set up on? 3 days. So what we're going to do, instead of 3 days, we're going to go down to 10 days, 30 minutes, so we can see what the outcome has happened in the last couple of 5-6 days. This was, the push-up. This is the POC. That's the value area high. That's the value area low, the shadow. And this is where the time spent on the contract. So whenever we look up, we came back, retested the prior POC high of the prior days. We reset back down. We continued. That was the time spent. Then we fell down. Then we closed lower on this is the open, this is the close. Basically, what I'm going to do is just show you how to look at it on those two areas so you can see it. On Thursday, the open was here. Okay? And the close was here. We were lower. But most of the contracts, we had two distribution. We had this high here and the value area low here. But the POC never shifted down here. We were trying to build POC down here. But due to the liquidation break and the time spent was up here. So if I draw a fib from here to here, my 50% line is here. So if the time spent was higher, I expect the market to go higher. So on Friday, we had the value area high, value area low, and most of the contracts were higher. But the time spent early morning in the overnight Eurozone was down here. We had 3 distributions here. You can see them. And eventually we climbed higher. Does this mean that we're going to have a range-bound possibility Monday? Remember, we trade what the charts gives us, not what we think. And if we think that we're going to get a small reset inside, this may be to continue higher. So don't be biased to one side. Trade what's given to you. Don't listen to the noise in the market. Let's now go back to the regular charts. We're going to go time frame. Instead of monkey bars, we're going to go back to standard, what we had here on the 4 hour. We're going to look at gold GC. This is something to consider. Gold, if it is the fear gauge and that people think that's the safe haven if the market turns south, we do know that we came out of a linear regression channel to the upside. We created a shoulder. We are still trading inside the range. I am looking at this fib extension on the annual charts. We have tested it a couple of times and bounced off it. This is very important area, the 1768. We do not want to lose it. If we end up losing it, I think the expectation we come back into the prior range of this distribution on the monthly chart before we can continue higher. And if we do end up holding the 68 and we reverse back to the mean in that small linear regression channel, I think gold can continue higher. So try not to be biased to either side, because on the long time frame, gold still in a downtrend inside that linear regression channel. What I'll do, I'll go for 3 years to show you what I'm seeing. You see that push up? Since then, everybody's trying to get gold to the upside. Have we broken higher? Yes, this is a linear regression channel. We keep testing the bottom of it. We try to test the top. We come back to the bottom. We test the top. We try to test the top. Right now, we are at the 50%. And if I use GLD, because I don't have any fibs on it, that's the ETF for gold. That will be at least, you can see it a little bit more cleaner than what all those fibs that I have on the side. We can see that push up. We are still in a down channel, linear regression channel. We have the 18 and 50 and the 38.2 fib in order to clear, in order to continue back higher to this area. If we fall back and we can catch our breath in this area of this consolidation and these candles that took us up that hammer, and we continue higher, I'd like to see gold back in this area eventually. I'm not trying to be biased to either side. I just want you to be aware where the charts are in relationship to where we are today. So on the weekly, we can go back to the time frame. We go back to intraday. We'll use 90 days, and we go 4 hours back on the charts so we can see the shorter time frame where we are in relationship to the overall market. And if I do zoom in, keep an eye on the weekly fib, that 68 to hold. If it doesn't, look for the 45 for another bounce back up in gold. And if we turn around and we clear the 85 area, look for the opposite side of the market, okay? 86. So let's go now to CL, which is crude oil. We can see crude oil, you can use USO, okay? Everyone can use USO or, an ETF fund for oil. In the last week or so, we had that consolidation here. We tried to break up. We're retesting the prior breakdown of the month before on the fib extension. We retested that month. We looked above. We fell back in, but we're still struggling to clear the 50 Fibonacci on the monthly chart. If we do clear this, and since we're trying to break out of this channel, we look up, but we do have a smaller channel going up this way, holding us up. If I connect those dots, and what I'll do, I'll use this channel to keep us in line in relationship to the moves from before. And you can see that these lines are here are very nicely connected to the upside. We have to hold this, and we are in an up linear, and we have this down channel here that we broke out of. We're trying to break out of this area. I did this on purpose so you guys can see how to evaluate and draw linear regression channels in the direction of a breakup or a breakdown. Are we in a symmetrical triangle? Yes. Can oil fall down? Yes, but you have to understand the momentum in the market and the direction where we are at. So let's take a look at BTC. This is something that I've told everybody at the 65 area, 63, 995. Watch your fingers. If we lose this area, we're going to go back lower. We have filled 5 of the gaps to the downside. Do we still have more gaps to the downside? Yes, we still have 2 more. But I'm not saying that we can continue lower. We have retested the 50,000. This is very important area for everyone to understand. The 61.8, the monthly Fib, in order to break above that 52,000 and close above it in order to continue high. If we stay under pressure and we lose the 49,500 area, or 49,495, we lose that, we can come back to the backside of the weekly Fib that we bounced off this week in the overnight action. We tried to look up. We do have that small gap here because I usually look for the overnight price action on top of the gaps that happen in trading hours, okay? I usually look where the candle high or where the candle low from the trading hours in US markets, where those gaps up, and I highlight them to show them. These were the prior gaps here. You can see them. I highlighted them. We came back 100% and retested them. I'm not being biased to being bearish on Bitcoin. I'm not biased to being bullish on Bitcoin. Everybody thinks when I'm saying to somebody, hey, get out of the way, look at your fibs, look at your channels, there's a reason behind it, and my madness to keep you in line on a direction of a trade, not holding a bag when it's at the high, or not buying, not selling at the low. So you have to learn how to buy low and sell high, or short high, buy back to cover your position low. So since this area have been lost and these two gaps are here, this is my concern. If BTC cannot clear this area on the weekly chart and the 61.8 for the weekly, we may have another reset because we're still in a down linear regression channel. If I connect this, where is this one? Okay, that's slower. Okay, we can get this one here to do the channel. So everybody doesn't get mad. You can connect it to this one. We know that's the channel it needs to break to continue higher. If I'm going to go for the time frame, instead of daily, we're going to go 2 years, and we're going to go weekly. And the reason behind this, it's going to get crammed up on the right. I want everyone to understand every hype after the 8,000 area, we had called it here to go long to about the 50,000. We exceeded that 100% deviation. If I take this Fib on the annual chart and I duplicate it to the high, your annual would be here. We lost the double deviation on the annual Fibonacci chart. This area is going to be very critical to maintain back up. I'm looking to see if the weekly chart, the 18 simple moving average, we're going to zoom in here, that 18 right here is going to hold. If it doesn't, the backside of the prior gaps will be retested, and that would be around the 43,000 area before we can get a nice reversal back up. Hope this is helping you to understand the reason behind this measure. Just remember, BTC is not the currency for the world. It's some kind of a commodity that people turn to. Instead of turn to gold and silver, they turned to BTC and they traded it. Most of the guys that were in the $1,000, $500, $200, $100, $50, $10 range, $1 range, or even 50 cents have dragged that coin all the way up there here. Are they financially free? Yes. But remember not to be buying the hype before the reset, because this will hurt you very badly. Let's go back now to a 30-day 4-hour. And remember, trade the charts in front of you. The 100% monthly Fib is 46, and the extension of it on the monthly Fib downside is the 37. If you look at the weekly Fibonacci, my 38 is 43.4. I don't think it's going to test here yet, but I think it should get some kind of a relief before continuation lower, and it has to hold the 49,495 in order to go back to being bullish. Let's look here at Ethereum E/ETH. I know I went over too much that stuff, but I will make it short and brief now from each one. You can see ETH recovered a little bit better than Bitcoin after that Thursday dump. In order for ETH, this was the prior weekly fib that I've noted. If you noticed, I don't have it, so we have to get rid of it, remove it. I did not get it ready. I activate the fib here. I activate the chart. I move my weekly fib to this high here. Where is my high and low? So I know Monday was this low and the Sunday night price action. This is it. You can see it. This was the 19th. So we're going to go get a Fibonacci. And we draw from high to low. And if I'm at the 50%, the 38.2 or 61 usually acts as support. So we can grab this fib here to this high here. And that's our weekly fib. We are at the 50% right under it in the 18 and the 50 SMA. In order to clear, that would act like 61.8, which is a 38.2 to continue higher. And you can see that the machine did the fib for us on ETH. Let's take a look at AAPL. And I'll look at two ETFs before. Apple is range bound. Amazon, range bound, trying to break out of the channel. Facebook is a little bit under pressure, I believe, until it turns that channel. We can see that there is a channel down here. We can connect it. If it clears it and clears the 50 SMA, we have a possibility of Facebook turning around. Let's take a look at Google. Google is, remember, it was a side action range bound and eventually broke up. It's coming up, Google earning report. This is the weekly fib. It's range bound, trying to break up one more time before the report. Let's take a look at Nflx. Netflix was actually after two earnings. We had 4 earnings. 2 of them were down, 2 of them were up. This last earning that we had was a down move. It has recovered on the monthly 100% fib, but can it continue higher? We got to keep an eye if we can clear the 61.8 and the 50 SMA to continue higher or not. Netflix is a little bit under pressure right now until the change in the trend happens to it. There's Tesla. Remember, General Motors, Ford, BMW are coming out with some kind of crazy horsepower electric cars, and at the same time longer distance. Remember, I don't hate Tesla. I hate the product of it. Elon Musk is a genius. He's a great guy, but I want you to understand Tesla's evaluation's out the window. So on a weekly basis, it has recovered part of the move. Is it going to continue out of this down channel that we have on the annual chart from the high? We looked above in the overnight action, then we fell back in. In order to clear it, I need to see the 770, 765, 760 to clear to continue higher. And if I do fall below the 705, I would watch my fingers, or the 700 area to the other side of the fence, which is the backside of the 61.8, and eventually the monthly fib of 50% Fibonacci, or the other side of the fence on the opposite side. So I'm not biased to either side, just trade what you see, because Tesla's is a little bit hard to trade when you cannot short the position. You can only buy the position and hedge it with options, or take a short on using the option, straddles or broken wing. Okay. Or directional trade for that option price. Let's take a look at Wind Resort. Since there is a little bit reopening of the market, can this market eventually U-turn? And what I've been watching is that down channel on when, and we kind of rounded off. We're coming to a rounded off. I'm watching this area to see if we can clear and come back to here to see if there's any possibility of a change in trend. I'm not going to look at the airlines. I'm going to look at IEF, which is the short-term, IEF, which is the ETF for the short year 10-year bonds. If the government has been buying these bonds back and they're going to keep interest rates low, and they're talking about there's no inflation, nobody's looking at timber, nobody's looking at the price of gas, nobody's looking at the price of milk or vegetables or meat, they are out of their mind. We do know since the pandemic, prices have increased higher. So is inflation around the corner? Possibility, but home sales have improved from 2006. Last report on Friday gave that boost in the market. So we have to keep an eye on inflation and interest rates, home sales, and reopening of the market to see where we can expand to. So we are range bound in the bond. looking to see if this is going to continue higher. So that way the Federal Reserve would keep interest rates lower. And, Yellen and, Powell, they doing their own thing in the Federal Reserve. Let's take a look at two more other instruments, which is the XLK, which is the technology sector. You can see that the recovery. You could look at XLV. This is the healthcare sector continuing higher. We can look at the XLF, which is the Trust International Finance, I think. You can see it's recovered. If I look at NYA, just the New York Stock Exchange overall composite, it has recovered 100% of its move. The monthly fib, it got to the monthly fib extension of 38.2. Looks like it's going to continue higher. If there's any reset that is viable in the New York Stock Exchange, you can start choosing different plays in the overall exchange market. Let's go back to the ES. This is the ES Fortune 500 company. We can see that we had an annual high. And if I go back to the daily chart, we're going to go to the daily and we're going to zoom in. I know it's going to look a little bit crammed up, but what I want you guys to remember, since the prior month high, this is the March low, the January low should be here, and the prior peaks of the November launch of the vaccine, these are the retracements in case the market turns south. And do we continue to the 43 possibility? Let's just minimize this, and we're going to open the other chart and maximize this one for us. And what I want to do is go over the scenarios. From 1983, the rate of change, in 1990, there was a short-term reset, about a year. It may last between 60 days, 50 days, all the way to 350 days before we can get a major move back up after 2 years, 3 years, 4 years, and 5 years. Average rate of return is 62%. But on the short term, we can have a little drawdown in order to have a better overall outlook in the market for the next 10 years. Let's take a look at one more slide. And this is very important. I took the hypothetical numbers from those years where the drawdowns were. They were about 15%. We know this is the average on the top. I took the 4173 in the S&P 500, and we calculated the draw up, which can go to 4300. You can see that 4300 up here. And we know that the drawdown can be 3630, which is the vaccine high. The January low was a little bit higher. March low was a little higher than the vaccinations. If I took a look at the 1983, the draw up is 4316, and the drawdown is 3700. If we look at where the 3700 is, it's the March low. So we have to be open-minded to either condition if there's going to be a change in the rate of change, or the RSI or stochastic momentum indicator on the weekly or the daily chart to keep us in line in relationship to where those resets are. And if I look at the 2010 recovery from the 2008, and we continued higher, this is the resets that we had. We had a 3%, which is about 4,300. But to draw down at 3,600, which can bring us back to the vaccine area or the January low of 2021. I hope this was helpful. And remember, we're going to trade the charts in front of us. No bias to either side until we are proven wrong on the charts. So let's take a look at one more. I've been putting this on every week's chart for the last since April 16th, this scenario. What I want to remain open to change, but don't be biased. Do not listen to the news and trade what's given to you. Okay? Since the VIX is lower, hasn't pushed above the 20. So why should I be worried about the /VX or the VXX, which is the banking sector, or the VIX, until I see that the change in fear is coming, I'll change my thinking. So hope this was helpful. I look forward to seeing you on Discord on a week at our website. And if you need our assistance, let us know. Take care and enjoy your weekend.